Hello, this is Better Wave. How's it going? Here's a new video on Costco. Today we're going to take a look at Costco, see what's happening, what could be happening, using the Elliott Wave theory, as well as digging into some dividend data for the company. So at first look, as you can see, the chart kind of speaks for itself. So we've seen continuous growth. Yes, we've seen some downside during the most major crisis that we had in the past. However, we kept on growing, and we did so in quite a sharp and fast manner. Let's take a look at the wave count. Wave 1 and 2, up into 1, 2, and then again 1, 2. So when you have a series of 1 and 2, for those of you who are not too familiar with the Elliott Wave theory, when you have 1, 2, 1, 2, 1, 2, usually you get a very explosive move to the upside into wave 3, because after 1, 2, 1, 2, 1, 2, you need a series of wave 3s. So 3, 3, and 3. And as you can see, we've had exponential move to the upside into wave 3. So obviously, this is a log chart, this is a log scale, and what is a straight line in logarithmic scale is a curve, an exponential. And you can see that just by getting rid of the logarithmic scale. You see how on exponential scale, it's a curve. This is an exponential function. The moment, obviously, you put it back into log, it becomes a straight line. So that being said, why can't this be 1, 2, 3, 4, and 5? Well, if it was a 1, 2, 3, 4, and 5, then if you look at it, this way 3, if this was 3 of this degree, which is cycle degree, it will be the shortest. Therefore, we would have a major wave count invalidation. That's why this count obviously doesn't break that rule, so it's valid, and obviously looks like the best fit for what we're seeing. In addition to that, if we look at net percentage retracement, this was a 71% move to the downside, and this was a 35% move. So this was the largest retracement we've ever had in Costco history. This was the second largest. That makes me think this is the largest degree correction ever, cycle degree. This is also a major correction, but one lesser degree, primary. Every correction that came ever since, it was a shallower correction. The most recent we had was just a 20%. So speaking of upside targets, as the count seems pretty clear, if we zoom in here, this looks like a clear Elliott wave triangle into wave 4. We can take a look in just a second on the daily chart. So if you look at long-term targets, what we like to do is look for fib relationships. So for primary wave 3, as we usually, first target would be equality of 3 against 1, which in this example would be at $368. Now we passed on to equality, and now next target stands at 1.618 times the length of wave 3 compared to 1, which is at 1500. And now remember, 5 is a strong number, is a Fibonacci number. It attracts orders. So we have confluence of both fib level and 5 being a strong number. So that could be a target. Now, in addition to that, also regarding relationships of waves, we can check on relationships with wave 5. Now, usually wave 5 is as long as wave 1 or 0.618 times the length of wave 1. Now, let me zoom in for you. 0.618 times wave 5 against 1 stands at $1,154 and equality at 2,000. So as you can see here, kind of the minimum target for wave 5 would be roughly $1,200, and then next target $1,500, and then all the way up to 2,000. So there is a possibility that there's much more upside room to come. If we now look at the daily chart here, as you can see, it starts to get populated. We can see how, as I was saying, we seem to have a triangle into wave 4. Now, invalidation level for the count stands at $477, meaning that if we do move south of that number, this count is invalidated, and at that point we could look for some sort of A, B, C, and then upside, I do remain bullish. The count does not suggest for a major bear scenario, nor does the fundamentals. And again here, it looks like we might have had a wave 1 and 2, meaning that we could see further upside into wave 3. A minimum target for wave 3 would be $730. So as of right now, we found support on both 500 here, and then now on a minor degree on 550. So next target would be 600, and then next major target would be at 800. So we can aim for further upside. Why 800? 8 is a fib number, so it attracts large orders. So that being said, let's take a look at the averages. Obviously, we stand above all average, and right now the 20 MA seems to be kind of acting as support, and same goes for the weekly chart. So that was the wave count. Let's take a look at some dividend history. So as you can see here, we've had significant growth year to date on Costco, with being up 26%, and overall for the year it's up almost 17%. If we take a look at dividend data, you can see how the current forward here stands at 0.71% with an annual payout of $4.08. If we look at dividend history, we can see how Costco usually likes to pay special dividend cuts once every other year, as you can see here. But despite those huge payouts, you can see how we've had continuous growth over the past 10 plus years. You can see here $1, 2 cents, 90 cents, 79, 70, 65, and so on. So the company is increasing their dividend cuts. If you look at dividend safety, you can see how cash dividend payout ratio for the 12 trailing months stands at 18%, and then the 1 year forward cash flow payout ratio stands at a bit above 19%. If you look at dividend yield, as we said before, the company currently yields 0.71%, and with a 5-year yield on cost at 1.65%, so more than double what it is yielding now. And that reflects obviously on dividend growth. As you can see here, we've had a 10-year compound annual growth at 12.63%. So overall for Costco, we see significant dividend growth over the past 10 years with a low free cash flow payout ratio at below 20%. That being said, that is going to be it for me today. As always, don't forget to check out my other analysis on my other dividend portfolio holdings. And obviously, don't forget to subscribe if you don't want to miss out on the next update. Leave a like if you enjoyed the video, and I'll see you in the next one.